be in focus is going to be Crompton Greaves for sure. Last couple of days, the stock has been moving around. Now we have the results to contend with, and all importantly, the deal as well has been called off. Anisha, you have been telling us to watch out for it. Crompton Greaves under pressure today.
Oh, well, yes, Nigel, the worst of the fears have come true, and it shows that whatever concerns that the street had regarding this deal has not been unfounded. The reaction that we have seen in the stock is now looking, likely in terms of what has happened. So the company has informed exchanges that now the deal that they had with Pauwels Spaco for the sale of their international power T&D business, which they had decided to sell at 115 million euros, stands terminated. Now, they have given the reasons that certain conditions precedent to the deal remain unfulfilled, and these conditions were outside the reasonable control of both parties. But I do not know how much heart would the street take from this. They also mentioned in the following lines that they will continue to explore options for sale of the international power D&D business. They look to improve the efficiencies at this business and will also continue to progress as far as the B2B automation business of ZIV is concerned, which they had agreed to sell for 120 million euros. Interestingly, in the results that have come by, they have continued to show the profits or losses from these international T&D business as profits from discontinuing operations. So they're still not consolidating in their accounts. I do not know how much heart would the street take from this, because this shows that the management is thinking that they will let go of these particular loss-making businesses in near term. But as of now, this is very negative for the company, because the analysts used to ascribe a negative valuation for these particular international T&D business. I remember earlier, JP Morgan had ascribed a 14 rupee value of negative valuation for the entire overseas T&D business, and around 70-75% of the losses are expected to be on account of the international T&D power business. If you look at it, FY16 losses for these businesses was around 200 crore per share. Already the street was factoring in around 100 crore worth of losses for these business in FY17, but there can be a further cut in the EPS for FY17 for around 1.5 rupees. They were expecting a number for around 4 rupee for FY17. We can see a further cut by around 1.5 rupees. And even a FY18 EPS can take a hit of around 50% if we do not hear any positive comments coming out from the management in the con call that is scheduled for 11 p.m. today. If you look at the the process that the company has been taking, it raises a bit of question on the credibility as well, because this has been a long drawn deal that started in May last year. They took back the binding offer earlier, and now they went ahead, accepted it later, and now it has been completely taken off the table. So that raises the question as well. Lastly, in terms of the numbers, disappointing numbers as well. So nothing to take hard from the numbers. The margins have come off to 5.6% versus 9.1% earlier. The company reported a net loss of 10 crores versus profit of 10 crore reported last year. And do remember that this already includes the profit of ZIV, which is a discontinued business now, and does not include the losses of the international power T&D business that they're looking to sell now. Otherwise, the numbers would have been worse. So clearly, nothing seems to be working right for the company right now.
Okay, all right, Anisha, we're going to leave it on that note. Thanks very much for joining in. Crompton